introduce to all of you Tom Edgington, our National Account Manager on the F&G Life Sales team. Good morning, Tom.
Good morning, Emily. Awesome. Thank you so much. And thank you everyone for joining this morning or afternoon, depending on where you're located at. So what we're going to do today is we're going to just do a quick update and go through our two life products that you have access to, and that would be the Freedom and the Gold. And then also some other updates for 2022. And then we'll hand it over to Emily and we'll go through some common scenarios and make sure you're familiar and up to date with our illustration software. So let's go through the products, the Freedom and Gold 2022. So those of you that are joining today, you know, Emily talked about partnership, and you guys are in a very exclusive group. We want you to know that a very limited group of agents that are contracted with F&G actually have access to the Freedom and Gold product. And we'll talk about the power and why that's so important here later in today's meeting or presentation. Dedicated resources, so whether it's Emily and her internal wholesalers, or your dedicated sales team like Ryan Parker and myself, or underwriting a new business. You know, we're an Iowa company. We want to make sure that you have some of the best relationships in the business, and more importantly, that it's an interactive relationship. Today, we're going to talk about the Freedom and Gold and really what makes the IUL products with F&G so great is that proprietary, but then also the diversity in indices. And coming up next, we're going to talk about the power of options and why our products, you know, the products are great, but your clients have a number of different index options that they can select from. And the ability to adapt to a changing landscape. So when you look at F&G and IUL sales, the Gold and Freedom, if you look at 2020, 2021, we are #1 in IUL sales growth. So with your partnership and that great sales, we're actually the #8. F&G is the #8 carrier in market share for indexed universal life. So without your partnership, we couldn't do that, but that's something you can definitely tout to your clients. If they ask who F&G is, they're the #8 carrier in market share for indexed universal life. So we're very proud of that. And again, thank you for your partnership to be able to make that happen. So, you know, we're going to talk about today's products, and your clients have a need, and F&G wants to provide your client a solution. But more importantly, when we're providing that solution, we want to make it quick and easy for your client. I like to use the word transactional, making this process transactional, so quick and easy, where it's not dragging out and taking too long. So we're very proud of F&G that we have a couple different programs that make getting solutions to your clients quicker or faster. One that you're going to be very familiar with is our exam-free underwriting program. So this program came out at the beginning of the pandemic, 2020. And basically what this program is, it's 100% guarantee that your client doesn't have to take a paramed. That truly is unique. There's other programs in the industry. A lot of times they're referenced as accelerated underwriting programs. But with those programs, it's not a true 100% guarantee that you don't have to take an exam or a paramed. With F&G, we're 100% guaranteeing, and the parameters are your clients are ages 0 through 60 and up to $1 million. Even more important, to build off that 100% guarantee, is 90% of the time your clients are getting standard or preferred, and those are the top 2 ratings that F&G offers. One of the questions that comes up is, when are you guys going to come out with super preferred or preferred plus or super standard, maybe some other ratings that you see at other carriers? And my response to that is, we don't need to. If you look at the pricing of preferred and standard within our products, they compete or they're better than other carriers, super preferred or preferred plus. So be very confident when we're making this process transactional. We're guaranteeing you don't have to take the exam, but we're also giving you the top 2 ratings within this program. So it's not a separate rating for the exam-free program. The important thing is making the process transactional. So when you're submitting clients through exam-free, they fall within the parameters of ages 0 through 60, up to $1 million. We're getting a policy issued in 7 days or less, 70% of the time. So your client has a need, we have the solution, but more importantly, we want to get that solution out so the client can get the policy, and as an agent, you get your commissions. What we're really excited about in 2022 is building upon this process. So later this year, what you'll see is instant approval. And with instant approval, you'll go online, fill out the application, answer some medical information for your client, click the submit button. It'll think, and right then and there, you'll see if your client's approved. If they are approved, then the policy would automatically go to issue, commissions would be generated, and you'd have that policy within 2 to 3 business days. So we're making this transactional, and both of those programs will definitely do so. One thing to elaborate on with instant approval. So if you look at clients, who might qualify for this instant approval program. So it's going to be your clients that typically are in that preferred range. So no major medical history, clients that are going to really flow through the process without medical history or any other, permanent residence, things like that. So 40% of the time, we're hoping that clients within that category will flow through exam or instant approval, and then you're getting that policy issued ASAP. So something that to look forward to in 2022. We'll have further details that we'll absolutely share, and probably before the launch of instant approval, we'll hold another call like this so that we can share more details, but very excited for instant approval in 2022. So both of these programs, whether it's exam free or the instant approval, making sure that we're getting solutions to your clients as fast as possible. Today, what we want to talk about or really elaborate on is F&G's role, partnership. Our role in this partnership is providing powerful solutions to you as an agent and powerful solutions to your clients with the needs that they have. So why F&G IUL? What we're going to talk about today is strong product performance, and it's going to be driven by a high cap and reliable cap story. So with an IUL product, an indexed universal life, the value proposition is high upside potential, and that upside potential is sometimes limited by a cap. So what we have is a very high cap story. So we're giving your clients higher upside potential than what you might see with some of the other IUL companies out there. And we're very proud of that story. We're going to talk about the golden freedom and show a reliable cap history within the S&P. But then we're also going to talk about some of the other indexes and seeing that true high upside potential for your client. And what that's doing is it's helping to drive policy values. Within an IUL product, we're looking at indexes, and we're using those indices to drive up, we're following the index, and based on the performance of the index, then we're crediting the policy values. We grow policy values, then maybe we're taking those out for retirement, for college funding. There's a number of different needs that we can use those policy values for. What is very important and truly, again, unique with F&G when you compare F&G to other IUL carriers is these products have a 5% contractual guarantee that the variable loan will never exceed 5%. So that really is unique. If you look at the current variable loan rate, it's just south of 3%. So I believe it's right at 2.98, but we're contractually guaranteeing that it'll never go over 5%. That is very important. If you look at some other carriers' current variable loan rate, it's probably in that 5 to 6 range already. So again, our current rate is just south of 3%, but we're never going to exceed that 5%, and it's a contractual guarantee. One of the truly unique things, and this is an exclusive index with F&G, and it's that Barclays Trailblazer Sectors 5. So hopefully you've heard a lot about this. It's really one of the big driving factors of our success, sales success, and it's a great solution for your clients. With the Barclays Trailblazer Sector 5, they actually don't have cap, so they have unlimited upside potential. There's not a lot of indices out there that offer unlimited upside potential, and this index has no cap. What's even more important is a lot of times when you see that unlimited upside potential, maybe there's a spread or fee associated with that unlimited upside potential. With the Barclays Trailblazer Sector 5, you don't have a spread or fee built into that. So no smoke and mirrors. And even the most important thing and what really drives policy values is that 190% participation. So it almost seems too good to be true, but this is one of the exclusive indexes to F&G where you have unlimited upside potential, no spread or fee, and 190% participation. One of the questions that often comes up when I go through the Barclays Trailblazer Sector 5, whether it's an agent or a client, is that sounds too good to be true. How is that possible? So we'll talk later about the Barclays Trailblazer Sector 5, what type of index that is. And when we talk about that, then we'll also explain how it's possible to offer an unlimited cap, no spread or fee, and 190% participation. So life insurance has definitely changed. If you look at life insurance products, maybe 20 years ago, it was a death benefit focused solution. Now it's evolved over the last 2 decades where death benefit's important still. It is life insurance. Now we have some policy values. We can use those policy values for tax-free retirement, college funding. But the thing that's really happened over the last decade is living benefits. So now you can actually access your death benefit prior to death, whether that's for a critical illness, chronic illness, or terminal illness. So you're actually able to provide your clients basically 3 solutions in one product: death benefit, tax-free retirement, and now living benefits. The power of crediting options. So when you look at the Gold and Freedom product, there's not just going to be one index that's within that product. You have a power of options. And that truly is just putting your client in the best possible position, because they can diversify or allocate their premium, excuse me, they can diversify or allocate their premium to not just one index, but to multiple indexes. And when we go through these indexes here in a second, what you're going to see is they perform in different market conditions. So it's very important to have a number of options for your client to allocate their premium to help drive strong policy performance. So when you look at the Trailblazer Sector 5, again, that's an unlimited cap, 190 or 180% participation, depending on the product. We also have the S&P 500, which is a traditional index within an IUL product. And then what's unique with F&G is we actually do have a Dow Jones Real Estate within the Freedom product. And then when you look at our Gold product, it's going to have the Gold Commodity, the Dow Jones, the Barclays, and the S&P. But we'll elaborate on those here in 1 second. So power of options. You don't just have one index within our products. You have 3 to 4 indexes that your clients can select from and allocate and diversify their premium. And that helps to drive strong policy performance. So let's look at each index. And we just updated these numbers to reflect what it looked like in 2021. And what we want to show here is the power of options. So in different market conditions, different indexes are going to perform differently. And that's why it's so crucial and critical to have those options for your client. So the first one here is showing the 2021 returns on the Freedom product. And this is reflecting the S&P 500. So when you look at 2021, the market was doing very strong. I believe it was around 21% was the S&P return. So what you're seeing here is 13% cap in each monthly segment for 2021. So if your client had a segment that was ending in March, April, May, September, so segment meaning 1 year, they started their policy in September of 2020, and now the policy is maturing, or that segment is maturing in September of 2021, they would have seen a 13% cap. So that 13% is what's credited to their policy. Typically when the market's doing well, the S&P is doing well. So the market was doing definitely very well in 2021. So that's why you're seeing those caps or high performance. The other product that we want to show is the Barclays Trailblazer Sector 5. And again, this is coming from the Freedom product. So the Trailblazer Sector 5 is a volatility controlled index. So its volatility control is targeted at 5%. So what this is able to do, and comparing it to the S&P, so the Trailblazer Sector 5 can actually rebalance on a daily basis. That's really unique for an index. So if you compare that to the S&P, maybe it can rebalance once a year. So with it being able to rebalance on a daily basis if needed, and that would go from ETF stocks to cash and bonds if it needs to rebalance. And it's all based on volatility of the market and the sectors that it looks at. So it's focused at keeping that volatility at 5%. So with the market last year, there was a lot of volatility. So it was moving from those stocks to cash and bonds quite a bit. So you're seeing some of these returns. So when the market's kind of crazy, a lot of volatility, what you're going to see with the Barclays is it's really trying to limit that volatility. That's what the index is designed to do. So it's another great option to have to complement the S&P 500. So as you can see, going at the end of 2021, now we're getting up into almost that 6% crediting rate for the Barclays, where the market maybe is steadying, so that volatility control. With the volatility control, when you look at the 190% participation with Freedom, 180% participation with the gold, remember that 5% volatility rate is very important, because when you look at any index, so you're going to look at the options, and the options are going to have a cost. And depending on, if you look at the Barclays Trailblazer Sector 5 with that 5% volatility, the cost of the options is actually going to be lower, the lower the volatility is. So since it's a lower cost, because it's a volatility controlled index, that's how we're able to provide that 190% participation or 180% participation. And to make sure you understand what that means, if I gave you $100 and then I said a year from now, would you accept $190? That's, most people are going to say yes to that example or that scenario. That's what 190% participation is. So if you get $100, then based on the return, you're going to get $190 back. So it's 190% participation. So that's how we're able to offer that. It's because of the volatility control and then the lower index, the option costs within that index. So we're giving that directly to your client as a powerful solution where they have unlimited upside potential, 190% participation or 180, and it's really helping to drive policy values. But depending on different market conditions, the Barclays is going to perform better. And as we saw last year, the S&P, with the market doing so well and having a lot of volatility and increases, it was a cap. So the power of options here. If we look at the Dow Jones, so when the market's doing well, real estate's typically doing well. So this is an index that really, it doesn't have a cap. It has a 1.1% spread. But if you look at some of the returns here, that's the power of options. Look at your Dow Jones performance in a number of months if you had a segment maturing. So you're looking at double digits really across the board and high double digits. And now we're looking at the gold performance. So gold, if the market's doing well, typically gold is going to be the opposite. So with the market doing well, what you're seeing here is in a lot of the months from July through the end of 2020, where you're getting that floor. And the floor on these products is 25 basis points. So worst case scenario, your policy would still get credited that 0.25%. So power of options, that's just showing the indexes that these products offer and how these indexes operate in different market conditions. So let's talk exclusively about the Freedom product and where it really shines, and a little bit more product details for the F&G Freedom product. So Freedom product is built for max funded scenarios looking for accumulation and income. So scenarios typically where we're not so much focused on what the death benefit is. We really want to minimize the death benefit to minimize the cost associated with that death benefit to maximize our growth potential. Within the Freedom product, again, you have that contractual guarantee that the variable loan will never exceed 5%. You have the S&P 500. It says 13.5 here. Apologies on that. In August of last year, we actually changed the S&P cap to 13%. So that would be the cap on the S&P. And we feel comfortable with that. We did make the change, but we think that that'll hold steady for at least a couple years. You have that Barclays Trailblazer Sector 5, unlimited cap, no spread or fee, and 190% participation. And that 190% participation, is huge because it's a volatility controlled index. So if you look at the 10-year average, it's just north of 6%. But let's say in 1 year you got 6%. with 190% participation, what's actually getting credited to your client's policy is around 13.78. So that's huge. So it's a volatility control. Maybe you don't see some of those higher returns or differences because it's a volatility control, but having that 190% participation is one big factor that helps to drive strong policy values. Within the Freedom product, you do have the living benefits. So if your client is table 4 or better, if they're typically in the state, and it depends on each state, so 75, 70. So as long as they're under that age and table 4 or better, this product would automatically include the living benefits, and there's no cost to have those included in the policy. So when we started today's presentation, we talked about a reliable cap story. So IUL product, high upside potential, downside protection. If you look at the Freedom product, especially the S&P, look at this cap story. So back when this product came out in 2018, the cap was 15.5. And now in 2021, it's still one of the highest caps on an IUL product in the industry. So a lot of companies have lowered their caps within the S&P. Our cap is still 13%. That's one of the highest, if not one of the highest out there. And again, there's no spread or fee associated with that. So higher upside potential and downside protection. And look at that reliable story within the Freedom product and S&P. So let's talk about the Gold product now. So Gold product is really, it's built for low cost. You know, more importantly, you're looking at death benefit, IUL sales, and it's going to be really designed for great juvenile cases. So if you have a grandson, a child, maybe you're trying to accumulate some values to use for college funding or give them a down payment on a house, that's where the Gold product is really going to shine. The other scenarios is maybe some older clients where you want to have death protection. So you're looking to pay a premium to maybe take the death benefit out to age 100, but you also like the benefit of having some policy values. That's where the Gold product is a great solution. 2-year rolling target. So something different here compared to the Freedom product. On the Gold product, you have you can sell it once, get paid twice. What does that mean? So target premium is what your commissions are based off of. So anytime you run an illustration, you're going to see a target premium. And for hypothetical purposes, let's say that target premium is $5,000 and the annual premium your client is paying is $2,500. So your client pays that $2,500. You get paid first year commissions on that $2,500. In year 2, since we haven't exceeded that $5,000 in annual premium, they go and pay that $2,500 again. And now you get paid first year commissions on that second year premium as well. So 2-year rolling target, selling once, getting paid twice. So if there's uncaptured target, then you're able to get paid first year commissions in the following year. So something that's very important and very attractive for an agent that has access to this product. Power of options within the Gold, the F&G Gold product, you have the Dow Jones, you have the S&P, you have the Barclays Trailblazer Sector 5, and then you also have the Gold Index. And just like the Freedom product, the Gold product offers those living benefits, so it does include the critical, chronic, and terminal illness rider. Let's go through the S&P story with the Gold product. So the Gold product came out in 2012, and the cap in 2012 on the F&G Gold was 12%. If you look at the cap in 2020, and it's still currently 12.5. So what that means and what's unique about F&G is in the in-force block actually shares the same cap as new business. So if your client had a policy back in 2012, they got an F&G Gold policy, the cap back then was 12%. Now the cap is going to be 12.5%. So their upside potential actually went up. So it's just showing a very reliable longevity and making sure that your clients have high upside potential within the S&P product. And again, when you look at these 12, and currently it's 12.5, that's going to be some of the highest in the industry, if not the highest. So making sure that your client has that upside potential based on index performance. So I was talking about the living benefits within both the Freedom and Gold product, and I want to elaborate on that a little bit more right now. So living benefits, these are very important. It's a new way of life insurance. We're very proud that our products include living benefits. So think of critical illness. Critical illness would be stroke, cancer, heart attack. So if you go through one of those conditions, and depending on the severity, you reach out, you file a claim, you can get part of your death benefit to help you with your needs right then and there. Terminal illness. So if you have a life expectancy of less than 2 years, you can access up to 100% of your death benefit. And I want to tell a story that happened recently in 2021. So we were at a convention for a very important partner, and an agent approached me and said that she needed help. They had filed a claim and it was just kind of dragging on. Well, the client got the policy. 3 months later, they started to feel sick. They went to the doctor and they actually were diagnosed as being terminally ill. So they filed a claim with F&G. And when you file a claim within 2 years of a policy being active, any insurance company is going to make sure that they, got accurate, all of the information up front, just making sure that it was, contestability period is what it's called. But we just made sure that we had all the information. But the important thing, and again, we're going to talk about partnership, is when that agent reached out to me, and just the type of company that F&G is, we really accelerated that process. We know that this is important for the client, so we made sure that it got in the right hands so a decision could be made sooner rather than later. And very proud to say that we were able to get that decision made by the holidays. So what happened is, it was in that contestability period, which can drag out for a long time, but we were notified back in November. So by the holidays, we had actually approved the claim, and then the client was able to get the money by the beginning of the new year. So the death benefit on that policy was $300,000, and the client got a check for $287,000. The power of partnership, and really it just shows what you do as an agent, and the solutions that you're providing to your client are so important. What you do matters. When life changes, you can change lives. I think that's a very powerful story, and we really greatly appreciate what you guys do as agents, because that's just a great testament, a great story on being able to really help someone in time of need. So critical, that was a terminal illness example, and then chronic illness. Chronic illness, so if your client can't perform 2 activities of daily living, now they can pull 25% of the death benefit, so they can pull that each year. One thing that's unique about this rider is it's an indemnity rider. What that means is you don't have to send in receipts for transactions. Once you're certified as chronically ill, then you take that 25% and you can use it as you see fit. As I had mentioned earlier, how do you qualify to get these riders included on your policy? So as long as you're table 4 or better, and under the age, depending on that state, and again, it's probably around 70 to 75. So you're under that age, table 4 or better, these are automatically included in your client's policy. Proud to say that chronic illness is approved in California now. It was approved on January 27th, 2021. And then in November of last year, you should see whether it's an illustration or new policies where the chronic illness rider is now included on policies that were approved on the 27th of January, 2021 or after, prior to November. What you're seeing is a process of us retroactively including those riders. So chronic illness is now approved in all 49 states. I'm not saying 50 because we're not currently contracted in the state of New York. So that's a great thing. You guys are a very exclusive group to have access to the Gold and Freedom product, exclusive because of that. Think of that Barclays Trailblazer Sector 5. You're the only group that has access to 190% participation or 180% participation. Then you also have that great story of the S&P, and to go along with the S&P, you have the Dow Jones or the Gold Commodity Index. So it's not just about product, it's also about relationship and service. So when working with F&G, if you have an underwriting risk assessment, you can reach out to our underwriters, whether by calling or by email. So we want to make that as interactive as possible. That's unique. Some carriers do limit your interaction with underwriters, where if you have a case and you have questions, we want you to reach out to us. And then making sure that your experience, whether it's as a client or as an agent, is top notch. So the policyholder portal, and then Sales Link. So Sales Link is your agent portal where you can access the software that we're going to look at here in a second, or you can look at your cases. So if you have cases in new business or underwriting, you can look at live updates and then all of your marketing information. So anything that you would need from an agent standpoint for cases that you currently have or running illustrations, that's what Sales Link would be utilized for. So Sales Desk. So Emily Scanlon's on our call today, and Emily is the manager of our internal sales desk. These are great resources for you guys. So if you have illustrations, product questions, they are a great resource for you to reach out to because they can help with those illustrations. They can help with those product questions. All of them has a wealth of experience and knowledge within the life insurance industry, and especially from an F&G Gold and Freedom standpoint, they can help with any questions that you have. So before we go to the illustrations, again, just want to talk about the high points of why F&G and what makes the Gold and Freedom so important. It's that high caps. So with any IUL product, the value prop is high upside potential, downside protection. Within our IUL products, Fidelity and Guarantee Life's IUL products, we're offering higher caps than what you're seeing with other carriers. And as we showed you or illustrated with the Gold or Freedom product, it's one that goes back since the product was released. So the Freedom product was released in 2018, Gold in 2012, and we're showing that high cap story. Proprietary indices with high cap participations. So the Barclays Trailblazer Sector 5 being available on both products, unlimited cap, no spread or fee, and that 190 or 180% participation. That is absolutely a big deal, and very limited agents have access to that. When you're taking money out of the product via loan, that 5% contractual guarantee to never exceed 5%, again, another big deal. Really no other carrier offers that or makes it a contractual guarantee. You have your dedicated case management team. So we want to make sure that we have a strong relationship. Product's important, but also your service and the relationship and ease of doing business is also very important. So that's what we want to talk about there. And then making this transactional. Your clients have needs. We have the solution for their needs, but we want to make it quick and easy. So that exam-free program and then instant approval that's coming out later this year are programs that really are designed and do help to make this process transactional. So Freedom and Gold, congratulations to each of you for having access to the product. It truly is a big deal. I've been with F&G for 7 months, and through that 7 months, I've realized how big of a deal it is. So I'm so excited that all of you have access to that product. If you have questions on the Freedom and Gold, feel free to reach out to the internal sales desk. You can also reach out to me. We are your dedicated resources, and we're always happy to help with product questions on the Freedom and Gold. Miss Emily Scanlon, can I hand it over to you now, or we can run through some illustration examples?
Absolutely. I would love that, Tom. Thanks so much. It's going to take Tom and I just a moment to shift my role to the presenter. So appreciate your patience while we are doing that. And thank you so much for all of your excellent questions, one of which I will answer right now, which is, can I show the sales team slide again? My favorite question and my favorite team to talk about, because these are the individuals I get to work with every day. So that question is taken care of, but do keep those questions coming. As you can tell, Tom and I are both very excited, enthusiastic, and passionate about what we do here at F&G. So I will attempt to keep my illustration presentation short enough that we have some time to continue answering some of those questions live. But if I get really excited and talk too much, which does happen quite a bit, because I really do love what we do, we'll do our very best to stay online and answer those questions via chat. So if you need to run right at the top of the hour, completely understand. We're happy to reach out to you separately, but we will try to spend some time answering those last questions here at the end of the session. So this is your internal sales team. Once again, these individuals would be utilized for your more complex case design, larger cases. This is not your new business team. You do have a dedicated new business team that will handle all of your case management and underwriting needs, but we are here to assist with your sales support inquiries as well. Now, one sales support inquiry that I'm hoping we can give you a head start today on is illustrations. So I'm switching gears here just a little bit and showing you SalesLink, which is our agent portal. Hopefully it's familiar and near and dear to many of you if you've been doing business with us for a while. My friend here, Ryan Parker, lets me steal his credentials every once in a while. Just kidding. I'm able to log in and pretend I'm Ryan for these demonstrations, but I'm sure many of you have met Ryan and seen him at meetings. If not, you can expect to see him and Tom at some of your events throughout the year this year. But this is SalesLink just like you would see it on a day-to-day basis with your business with F&G. But what we're focusing on today is illustrations. So from your homepage, you'll go into illustrations, and we'll launch our web-based illustration tool. I want to run through, I have on my list 4 main type of illustration designs that I'd like to walk through today. If you have a specific case, something that's a little bit more complex or something that you'd like some guidance on, that's where our life sales team would come into play. So you're welcome to give us a ring on those specific cases, but I think the examples that I'm going to cover for you here today will cover many of the ways in which we most commonly utilize IUL to meet our clients' needs. So that's the game plan for my portion of the presentation, is really a hands-on tutorial to show you how you can quickly and easily create powerful and effective presentations to meet your clients' needs. Sounds like a good deal? Hope so. Let's get rolling. So I started my new case here. Where I want to start with is really a simple target premium illustration. So let's say I have a client that's 42 years old. My sale is in the state of Iowa. As I mentioned at the top of the hour, our home office is located in Des Moines, Iowa, and that's actually where both Tom and I are located. So I'm going to choose my state of sale. You'll, of course, choose your own. For this example, I'm going to run the Freedom product, but really for a target sale, Freedom Gold, either one can be really utilized for an accumulation sale. I'll start with Freedom today here for this particular example. So target premium. What is that? We get that question quite often, and there's a couple of different ways to look at it. Here's the way I like to think about target premium. Target premium is a good, I would say, ballpark or maybe starting point funding for a client's policy. It's definitely not going to be the minimum premium, right? So we're putting in enough that we're getting cash accumulation, but target is also not going to be the maximum premium in most cases. So I'm also giving my client flexibility to increase their premiums over time as their budget allows, add a little bit more to enhance their accumulation. But if a client comes to me and says, like this client did, I need to make sure that I have, let's say, my mortgage protected or my assets protected if I pass away, and I just want to start funding this thing now, and I know what death benefit I need, how much should I pay? My first go-to would be to discuss with them a funding option at target premium. Now, your clients don't need to know the word target premium. It's not important to them. But for us as advisors, that for me is a really great starting point. So for this particular client, we're going to run a basic target funded illustration for $500,000 of coverage. So up top, client information. For a target premium illustration, you actually don't even need to use any solves. We'll come back to those. Don't worry, they're lots of fun. Instead, I'm just going to start off with what I know. And the information that I know for this client is that he wants $500,000 of coverage. So I'm going to put my face amount at $500,000. I'm going to leave it at a level death benefit option for this particular sale. We'll come back to that in a couple moments. And in my premium section, my client wants to pay monthly. That's what most of our F&G clients do. Premium type target. And you know what? My client is probably not going to plan on paying this for the rest of his life. He'll plan on paying this during his working years, and he'll stop maybe around age 70. So pay premium 2, you have the option to indicate an age that you want to stop paying premiums on the illustration, A, and plus that age like I did here, or a policy year by typing the letter Y. And look at that, we have a little cheat sheet in case you forget what those shortcuts are. Down at the bottom, interest crediting options, and there were some really, really great questions about interest crediting options, so we'll circle back to that, giving you some guidance on those at the end. I'm just going to leave those right where they're defaulted, but if you want to do a blended strategy, this is where you would make those adjustments. But we're going to keep it short, sweet, and simple for today's demonstration, so you don't get overwhelmed or confused, and you can see how quickly and easily you can develop these presentations. So I simply click View and Print Illustration. We have my thinking bar spinning down at the bottom, and in a new window, we pop up my illustration. Let's scroll right down to here in the Midwest, what we would call the meat and potatoes of the illustration, the main portion of the illustration. That would be your tabular detail. So I can see on this page that my client for $500,000 of death benefit, target premium would be $645 a month. Now remember, my client's not locked into that amount. The beauty of an IUL, and specifically the Freedom and Gold products, is the tremendous amount of flexibility. So my client can dial this up or dial this down depending on their needs, on their budget, and they can adjust that over time. But for a target funded illustration, we see really, really tremendous accumulation. In fact, by the time my client is, let's see, age 60, he has just shy of $200,000 of cash value in there. He's put in, of course, substantially less than that, and that continues to grow over time. So I've generated just a basic target premium illustration based on a specific death benefit. So you just simply put in that death benefit and you run it at target premium. Now I'm seeing some questions popping up. I'm not able to see all of them, but I do see a couple that are asking about increasing death benefit option. So that's absolutely an option to do on a target funded design. Your premium is not going to change. Target is going to be target for $500,000, whether I do an option B increasing or whether I do an option A level. So if it is important for your client to have his or her net death benefit growing and getting larger over time, then a increasing death benefit on this target design may be more beneficial. That being said, that will chew into my cash value a little bit. So an increasing option, if they're paying the same amount and they have an increasing death benefit option, your cash value will not grow as substantially as a level option. So it's really a balance between, does my client want a little bit more of an increase in his death benefit and living benefits over time, or a little bit more in his growth of cash value? And that's just for this specific example. We'll talk through how to do some max funded designs as well. So first illustration, target funded. I know my client's death benefit need. In this example, it was $500,000. Maybe your client needs more or less, but that's a great starting point. Let's start a new one. This is also going to be a target premium case, but I'm going to come at it from a different direction. Oftentimes, we know our client's budget, but we may not know what that means as far as death benefit. And they honestly may not necessarily know what they need, or their interest is more in the cash value versus the death benefit coverage. So maybe I know my client's premium amount and I want that premium to be my target premium. I need to solve for the face amount that will yield that premium as my target premium. That was a roundabout way of explaining things, wasn't it? Let me show you. I'm visual, maybe you are too. Let's talk through it together. So my client wants to pay a specific premium. He wants to pay, let's say, $10,000 a year. Maybe your client has more, maybe they have less. Absolutely fine. You would follow these same steps to determine what the face amount is that would yield that as a target premium. Down in my premium section, my client in this instance is going to pay on an annual basis. Maybe your client will pay monthly. That's A-okay. I'm going to leave my premium type at target because, again, he's paying to target. Once again, I'm going to cut my premiums off. Let's say, excuse me, this is a female. I keep saying he. This is for a female client, sorry. Switch my clients here. She's going to pay until age, let's say she's 45. Let's say she pays to age 65. Now I get to use one of my solves. So our goal here is to solve for the face amount that will yield my premium as target premium. So I once again want a target funded case, but I'm just coming at it from a slightly different direction. So face amount, oh, excuse me, I'm sorry if you can hear a little yapping in the background. I have a new puppy. We're all working from home, as many of you are. And the puppy likes to alert me when there is anybody or anything outside. So I apologize if you can hear my furry assistant, even though I just shut the door. Annual premium. So this particular client wants to pay $10,000 a year. Again, your client might have more, might have less. We can get to the same outcome by going through these same steps. So this is going to solve for the face amount that will yield a target premium of $10,000, and it will show that $10,000 being paid all the way through age 65 and just building some accumulation while, again, building in that flexibility for my client that I know that she can dial up her premiums if her financial situation changes, or she can maybe dial them back if it changes in an unfortunate or unexpected way. So, this is an unfortunate face amount we landed on, but we're going to roll with it. So my initial death benefit, $666,666. Maybe we round that. I don't know if you're superstitious or not, but this is where we calculated the face amount that would yield a target premium of $10,000. Now, quick way to check this is, and you'll have to forgive me for scrolling through these pages at a somewhat dizzying pace, but you can actually see what your target, your guideline limits, your 7-pay, your minimum is. We put that right on the illustration. It's not buried anywhere in there. So as you can see, target, we nailed it just shy of a penny. So maybe we could round that up a little bit. Minimum is going to be $416. My client is, of course, paying way above that. And they could pay up to that $12,000, that guideline annual, and not hit guideline limits and pay that on a level basis. So lots of flexibility there, but that's how we would run an illustration to solve for the face amount that yields a specific target premium based on my client's budget. All right, I think we have time for one or two more. And if I move quick, we also have time for some questions. So this is a really, really common scenario, maximum accumulation with policy loans. Tom did an awesome job explaining some of the really, really powerful loan options that we offer on the Freedom and the Gold products. So let's show you how to really use them and get a lot of bang for your buck out of the dollars that your clients are working hard and contributing to their IUL. So my client this time, let's take a 35-year-old male, once again, traveling back to Iowa, which, by the way, it is like a high of, I know many of you are in the Midwest, so you can appreciate this, but it is like a high of -4 here today. It's like terrible. It's awful. We're just waiting for summer to come around. But so in that picture, yeah, maybe there should have been some snow in that picture of the Des Moines skyline. But I digress. We are here nor there. 35-year-old male. Here's a really common scenario for an IUL and one we want to make sure we show you. My client has given me his specific budget. He has $350 a month that he wants to contribute to his IUL. He wants to do that for his working years, at which time he wants to stop paying premiums, and I want to show him how he can use his IUL to create supplemental tax-free retirement income for himself. Sounds good, right? We make this really, really easy in our illustration software. There's really just pretty much one step to deliver this type of design to my clients, and that's by using our most popular solve, the Max Acumen Income Solve. Me and my team use this all day, every day. The Max Acumen Income Solve is going to do two things. It's going to show me how I can maximize the dollars that my client is contributing by bringing his death benefit down as low as we possibly can while keeping my growth tax protected. So we're not creating a MEC or anything like that, keeping my growth tax protected, but he's not paying expenses on a death benefit that he doesn't want or need. So we're going to solve for the minimum face amount. So solve for face. I'm going to enter my premiums. He's paying on a monthly basis. I know my client's budget is $350. And you can shut off the premiums on this screen by scrolling down. I think it's much easier to do it this way. Just click OK. He wants to pay that for his working years, which is he's targeted for age 65 to stop paying premiums. At that point, we'll stop paying premiums and we'll start illustrating policy loans. So my solve for face, I've entered my premiums. When we want to stop, cash value target, my recommendation is to leave it on the default. This will target enough cash value that you have sustained coverage for the lifetime of the policy. You don't shrink that down too much, but you're still going to give a really, really powerful income story to your clients. So my recommendation is to skip over this cash value target. And then we layer in our policy loans. So we're going to start those when he stops paying premiums, age 65. And let's go ahead and run those out to age 100, which would be a duration of 35 years. Now, a couple options here. We will default to a variable loan rate. That's the most commonly used for an IUL, and that's really how your client can take advantage of their borrowed money, still having the opportunity to earn interest in the market. The other consideration here is this little checkbox using 7702 rates that were effective at the beginning of January last year. If I check off this box, I'm going to get a much lower face amount, and that's going to be absolutely the maximum my client can pay. So there's not going to be a lot of movement in there. He's not going to have a lot of ability to potentially pay more if he wants to later on. If I leave this box unchecked, I don't have a truly max funded design, but I have what I would call a really effective accumulation design. So my recommendation for clients that are kind of in the middle of the target age for IUL, meaning they're not older age clients, and especially if you're doing an option B design, so an increasing death benefit option, you don't necessarily need to check this box. So we can have more discussion about that if you're interested in diving into the 7702 regulations. My team or myself would be happy to talk you through those, but general guidance is for your mid-range ages of IUL. You don't necessarily get a whole lot more by bringing that death benefit down. So I'm going to, as I mentioned, maybe a B to A, so increasing death benefit option, switching to level is many times optimal for an accumulation design like this. So I'm going to go ahead and utilize that here. I'm going to do an increasing death benefit while my client is funding, and then I'm going to level it off. So I talked for way longer than it's going to take you to run this illustration. I told you I'm kind of known for that. I get very excited and like to explain all things about IULs. Tom and I have that in common. We're, again, really excited and enthusiastic about what we do. But step one, put in your solve for face amount, layer in your loan. Step two, if you like an increasing option, you can add that death benefit option in there as well. So here's our story. My client is paying $350 a month. He's going to pay that during his working years. We start with an initial death benefit of $163. That grows over time with that increasing option. So he actually has well over $500,000 by the time he's ready to retire. But more importantly than that, he has about $350,000 of cash value that he begins tapping into to the tune of $30,000 of tax-free supplemental income coming out to my client during his retirement. So that's a max accum and income design solving for face amount. If you all are willing to bear with me, I'd love to run one more design, and it's for a juvenile. It's a concept that we've already talked about, which is maximum accumulation. But we're just going to approach it a little bit differently. So for this particular client, let's say I have a 5-year-old girl, and mom and dad or grandma or grandpa want to give her an amazing gift by setting this child up for success in the future. I think about this as multi-generational planning. We love it. We do a lot of it here at F&G, and the Gold product specifically is an exceptional choice for your multi-generational planning. So the Freedom product would not be an option in this instance since that's not available for juveniles, but Gold will deliver amazing results, and here I'll show you how. My 5-year-old female, we're going to start with our face amount. On a juvenile, depending on the family situation, you're not going to be looking at a whole lot of coverage. So let's say on my juvenile, we're going to give her $300,000 of death benefit. The parents, have twice that, so I know that's what I'm going to be able to get on the child. And I want to max fund that. So I want to put as much as I possibly can in for my child to allow that accumulation. And then I'm also going to show some loans. So once again, we are doing our max accumulated income. I told you this is one of my favorite ones. Use it all day, every day. But we're going to use it a little bit differently. Instead of solving for face amount, I'm going to solve for premium. Again, I already know my face amount, $300,000, maybe it's $500,000, maybe it's $150,000. It's whatever that family's, overall coverage needs would dictate. We're going to pay that premium, let's say, to age 50. We can cut that off pretty young since she's starting so young. So at some point, she'll take over the premium payments. That's not important to consider in the illustration, but she'll continue funding this to help supplement her own retirement down the road. So we're going to solve for the maximum premium that can be contributed to this particular design for this 5-year-old. And then let's start some loans for her as well. Let's defer those loans to age 60, and we'll run those until age 100. So super simple. I'm just going to solve for the max premium that can be contributed for this $300,000 policy. And let's do those premium contributions on a monthly basis. Once again, option A, you're not going to be able to put as much in, but you'll have a level death benefit, so more controlled COI expenses. If you really want to fund this thing, really make it sing, option B to A is going to be a great choice. So let's do that. Again, keep in mind when this premium amount comes up, don't want to have any sticker shock. That is truly the maximum premium that can be contributed, not necessarily what has to be paid. But if you have a family that has the finances to contribute, this is a great way to show them how they can really optimize this beautiful and generous gift for their next generation. So we'll scroll right down. Here we are in the meat and potatoes. About $500 a month can go into this plan at only, again, $300,000 of death benefit up front, but that's growing for my child from day one to the point that she is an adult and, you know, maybe has a family of her own. She's going to have well over $1 million of coverage, and that continues to grow. Now, I did defer my income here, so let's see. Oh, this is my favorite thing. This is where you guys get to see my really good artwork. So my premiums are stopping here, and my policy loans are starting here. I told you this thing was going to sing if we can max fund it. So for premium contributions of $500 a month, I'm illustrating income well over $300,000 per year coming out to support this child in her eventual retirement. Now, there's so much more that she could do with this plan. We would love the opportunity to discuss with you how you can utilize juvenile sales concepts to build your client base. There's so much flexibility. They can take loans, you know, to supplement college funding or down payment on a house. You know, as you can tell, Tom and I and our teams would be happy to talk with you and will talk with you at length about the opportunities to create powerful case designs in a number of different situations. But we want to be respectful of your time, and we're right at the top of the hour. That being said, Tom and I are happy to stick around and answer questions. If we don't have an opportunity to answer your questions here today, you're welcome to reach out to the Life Sales team. Again, that's my team of wholesalers, experienced, and we're here to assist you with your case design needs. Tom is also available and would love to partner with you if you need additional support. With that being said, I'd love to reiterate the messaging that we talked about earlier, the story about F&G and our partnership with you. It truly is, as Tom said, it's not just about being a product provider, but you know what? We're really good at that. We are exceptional in the IUL accumulation space, but for us, it's not just about providing the best products to you and your clients. It's also about being a partner to you and helping support your success and your growth and your ability to grow your own business. So you'll see that in our dedicated partnership in terms of sales support, you know, Tom and Ryan's presence at your meetings throughout the year, your case management team that's always here and on point to assist you, as well as the development of some of the most innovative underwriting and processing strategies in the market. You are not going to find truly exam-free underwriting like what we do at F&G anywhere else. And we'd love to talk to you more about that. If you haven't had an opportunity to get familiar with our exam-free underwriting, or you think it's like what you know at other carriers, give us a chance to show you how it's different. So with that being said, we just want to thank you so much for your time and your attention, not only today, but your partnership throughout the year and throughout the years going forward. I'm going to pause here for a moment. If you need to jump off, we totally understand. Thank you so much for your attention. But if you can stay on, Tom and I would love to curate some of the questions that came in and answer as many of them as we possibly can. So just allow us a couple moments of silence while we're able to review those questions. I think one of the questions that came up quite a bit, Tom, and I don't know if you're still on. He might have had to. Nope, he's still on. One of the questions, Tom, that came up quite a bit in the chat that I would love for you to revisit is folks were very interested in the 190% participation rate on the Barclays. More specifically, could you explain a little bit about how that participation rate works? Like, how does a participation rate work would be my best way to ask that question. That came from a couple folks.
Okay. So from an IUL standpoint, I mean, traditionally, when you look at an IUL product or an index product, the participation rate is around 100%. And as an example, let's say that with carrier A, you have an S&P and the index returns 10% and you have 100% participation rate. So what's going to get credited to your client's policy is 10%. Now, let's say if it was 190%, so now what's actually getting credited to the policy is 19%. So when you have a higher participation rate, you know, it's above 100%, so 190%. Really what that's doing is the performance of the index or the difference. So if it's a positive difference, now your client's actually even getting higher crediting because of that 190% participation. So they're participating more in the difference, the positive difference in the index. So an example would be like if you look at the F&G, the Trailblazer Sector 5, the 10-year average is like 6.05, but that doesn't include the 190% participation. So let's say in a year, your client, the performance of the Trailblazer Sector 5 was 6.5. What's actually getting credited to their policy is 13.78. So
Great. Thank you so much, Tom. Yeah, and I'd love to elaborate on that, not to re-answer the same question because Tom did a great job explaining that, but there were other questions regarding how the products can perform in various interest rate environments and how to make an index allocation option selection. So I'd love to first and foremost reiterate that the products are designed to and will deliver downside protection. So low or flat markets, you know, not ideal, but they are an ideal time to be protected in an IUL. So all of our strategies on all of our products, both Gold and Freedom, have a floor or a minimum index interest guarantee of 0.25%. So if our clients are worried about a sinking interest rate market in the future, their growth is protected or their cash value is protected from ever losing value due to those flat or negative returns in the market. That's, I think, the most important thing that we consider as part of the story. Now, bigger picture, the goal of an IUL is to be a long-term plan to help the client accumulate value, right? So there's going to be years that are a little softer and there are going to be years that are really, really exceptional. And research has shown, and Tom, I'd love your feedback on this, that diversification is a great way to get your client to a balanced and strong long-term return. So for many of our advisors, that means creating a blended strategy in their IUL. So maybe I put, 50% in my Barclays, 50% in my S&P. That's just an idea. Your client can make allocation options every policy year if they choose to. But the diversification that's built in through those strategies means for many people, we can set it and forget it. We can let it ride. Yes, there will be years that are a little bit softer, but the years that have strong performance, you can rest assured that they are in a product that's going to give them back as much of that return as possible through our high cap and participation rates. So Tom, I don't know if you have any additional thoughts about utilizing IUL or any specific strategies during various market conditions.
Well, what I would add, Emily, is 80% of the time, if you look at policies with F&G, 80% of the time, what agents and clients are doing is diversifying. So whether it's 60% into the S&P, 40% into Barclays, or 60% into Barclays, 40% in the S&P. And sometimes they mix it up and do the Dow Jones or the gold. But the story here is they're definitely using that diversification, and that really goes back to the power of crediting options, where it's not just one index and you have to follow that index, where your clients have the option to select multiple indexes, diversify, and that just puts them in a great spot.
Great, Tom. Thanks so much. Anything that caught your eye, Tom, as far as questions or anything you'd like to reiterate? Otherwise, we can wrap up, and we'd be happy to answer some of these questions. There's a lot of them about specific cases. We'd be happy to address those separately with individuals. Is there anything else you'd like to reiterate before we wrap up?
One question would be if we're switching from option B to option A, do they have the option to then switch back to option B? I don't believe that they do. Can you elaborate on that, Emily?
So they started at option B, they switched to A. Can they go back to B?
Yes.
Wow, great question. I don't know the answer to that, which I'm fine admitting, but I'm kind of surprised at myself. So the short answer is I would think yes, because we do allow a switch from B to A, and we would also allow a switch from A to B. The client would potentially have to go through underwriting to switch from B to A. Now, the only question is I don't know if they can do that multiple times on the same policy. If they start at one, they can switch to the other one. I don't know if they can switch back, but we'd be happy to look into that.
And yeah, agree. There's probably some moving parts in terms of testing and all of that. The other one was if a client has chosen max accumulator, but during the life of the client, can it be changed to max to income? Yes, it can. So when you think of an illustration, what Emily was doing was showing hypotheticals. You can show income if you want, or you don't have to show income. But either way, when the client gets out to age 66, and let's say that's the age that they want to pull income, then they would reach out to F&G and pull income at that time. So remember, it's just an illustration. So whether it's max accum with income or just max accum, you can always show income, or the client can pull income down the road.
That's a great note, Tom, and I think a great one to finish on, because Tom did a great job reiterating really the flexibility of the product is, what you're sharing with your clients today is what we believe, or what you believe is going to meet their needs in the future. But hey, all of our needs are going to change in the future, right? So why not offer them a product that can respond to their changing needs? In terms of, my client can add more premium down the road, they can take loans sooner, they can wait and take loans later. So you're not locked into any specific plan. You can design something that's effective for their needs of their budget today. And then there's so much flexibility built in over time to respond to their changing needs as well. So that's really a great thing to reiterate, Tom. Well, we'll go ahead and we'll wrap up for today. Thank you so much for sticking around. It was such a fun conversation to have with all of you. Again, contact information for the internal sales team is listed on the screen. If they are all very experienced, they know just as much as Tom and I are, and are happy to help you out with your case design questions, with your inquiries about the product. We're here to assist. And you can reach out to them at any time. They are available to help out. Again, we will have a recording of today's session. It may take until tomorrow for us to be able to generate that and send it out, but it will be sent to you to your email that you used to register. And we'll look forward to sharing that with you. And again, on behalf of myself, Emily Scanlon, as well as Tom Edgington, and the entire F&G team here supporting you, we just want to thank you so much for your partnership and your attention. And we really look forward to a spectacular 2022 with all of you. Thank you and have a wonderful day.